Well, you know us as Joe
and Shane,
because we are
the Gold Guys.
If you watch the gold markets regularly, you'll have no doubt have seen gold spike up at some point, seemingly for no reason at all. It's not just miners or everyday investors making waves behind the scenes. It's the real power players that are much bigger and much quieter, central banks. Today we're peeling back the curtain to show how these financial giants steer gold prices and what that means for anyone thinking about buying or selling gold. So first off, what are central banks? Think of central banks as the world's financial gatekeepers. They control the world's money supply, set interest rates, and hold huge reserves of gold and other assets. But they don't just hoard gold for fun. They actively buy, sell, and lease it. Every move they make sends waves through the market, shaping the prices that you see in your coins, bars, and jewelry. Here are some things that might surprise you. In 2024 alone, central banks scooped up over 1,200 metric tons of gold. That's the biggest haul since the 1960s. When they're buying like this, that's a sign that gold is here to stay. So if you're thinking about investing in gold, it pays off to understand what the central banks are doing. When central banks buy, gold prices often rise. When they sell or lease gold, prices tend to take a dip, creating both risks and opportunities for regular investors like you and me. So why do central banks love gold? Gold is a historic safe haven, it's an inflation shield, and it's a portfolio stabilizer all in one. Plus, gold isn't tied to any one currency. When inflation ramps up in one currency or is more stable in another, doesn't matter. Gold is going to do great in either situation. In fact, the amount of gold central banks buy has more than doubled compared to 10 years ago. But why the sudden rush? Many countries, especially emerging economies, want to rely less on the US dollar amid trade wars and political tensions. Gold offers a great, stable alternative. So when central banks stockpile gold, they're telling everyone they're preparing for uncertain economic times, and that sends a powerful message to the whole market. So now, how do central banks really influence gold prices? Central banks pull the strings behind gold's price stance. When they make big purchases, the price spikes. When they sell or lease, price can fall, or at least shake things up a little bit. But their influence goes beyond just buying and selling. They set interest rates and monetary policy, which adds to the mix. When interest rates rise, gold might lose some of its appeal since it doesn't pay interest. But when interest rates fall, or when central banks flood the market with cash, like during quantitative easing, gold often gains its shine back because more money usually means higher inflation. And inflation, that's gold's arena. When investors see inflation risks rising, they flock to gold, pushing prices up even further. The takeaway, watching what central banks do helps you spot important signals in the gold market. It's less about guessing about wild price swings and more about reading the financial leader's rhythm. But what does that mean for small-time investors like you and me? When you see headlines about central banks buying gold, it's not just noise. It's a sign that even the biggest financial institutions trust gold's value. But don't rush in blindly. Gold is a steady game. It's not a get-rich-quick scheme. It's like your financial life jacket, protecting your portfolio when markets get rough or when inflation heats up. For beginners, it's best to start with physical gold, coins, bars, or rounds. You can hold it physically in your hand, you know that it's yours. So with familiar coins, like the American Gold Eagle or Canadian Maple Leaves, they're trusted, easy to trade, and well-known worldwide. Or go with some 1-ounce bars, those are also very reliable. When you're buying, remember, you gotta go back to the basics. First, buy from reputable dealers who can guarantee the authenticity and quality of their items. Second, store your gold in a secure place, whether that's in a home safe, a professional vault, or something else. Finally, keep your portfolio at a comfortable level for you, whatever that looks like. The key, patience. Central banks buy and accumulate gold steadily over years and think long-term. You want to do the same. Remember, gold isn't just some shiny relic, it's a trusted financial asset. When central banks double down on gold, it's not just a passing trend, it's a strong signal about where real value lies. Owning physical gold puts control in your hands, and it can't be hacked or erased like digital assets, and it stands firm when other investments might shake or wobble. If you're ready to start investing, at Goldguysbullion, we offer competitive pricing, authentic products, and expert support to make your gold journey clear and confident. So visit goldguysbullion.com to get the best prices on bullion, whether it's gold, silver, platinum, whatever, coins, bars, or rounds. Whether you're just starting out or growing your portfolio, we make owning real gold simple and secure.